Welcome back to Small Caps, ladies and gentlemen. My name is Kerry Stevenson, and today I've asked Chris Byrne. He's the Managing Director and CEO of Legacy Minerals. ASX code is LGM. Now, Legacy Minerals, for a junior, are kind of acting like a major at the moment. They've got 7 projects all around the Lachlan Fold Belt in New South Wales. Copper gold, lots of gold talk at the moment. Really exciting time. We're going to talk about what's going on, why a major has suddenly gone into bed with Legacy Minerals, and what the news flow is going to look like. So this is an exciting time, Chris. I'm so happy to have you on Small Caps because, goodness me, you guys have been working diligently in the background, and bingo, all of a sudden you turn around and say, oh, by the way, Newmont have come on and done a farm-in with us. And I just went, what? So before we get started on that, because I haven't spoken to you on Small Caps for about a year, so give us the overview of who are Legacy Minerals right now.
Yeah, thanks for having us on today, Kerry. So Legacy Minerals, we're a New South Wales-based exploration company. We IPO'd at the end of 2021, so fairly new on the block in that regard. We've got a package of 7 projects in the Lachlan Fold Belt, so close to 2,000 square kilometres. So it's a significant portfolio with a predominant focus on copper and gold. And we're looking at projects that we can, all our projects are being pegged, so free ground. So there's been no acquisition cost for us to build this portfolio. It's been a very grassroots establishment. We've looked at undervalued, underexplored projects that, might have had some sort of legacy production or, previous work done on it. That with new modern exploration techniques, with systematic work, that we can see we can add significant value to it. And I think it's, as you sort of pointed out, the work that we've been doing at one of our projects, Bauloora, that value add has been noticed by, one of the world's biggest gold mining company, Newmont, with our recent farm-in deal there.
I want to talk about the farm-in deal and what that looks like. But before I do, Chris, there's lots of companies out there. There's lots of companies looking for copper gold. How did you get on the radar of a major like Newmont?
Yeah, it's a good question. They reached out to us. So Newmont are quite active behind the scenes in New South Wales as an their exploration arm, Newmont Australia. Obviously, New South Wales, for those people that don't know it, is Australia's premier porphyry copper gold district. That's what it's known for. Home to Australia's largest gold mine in Newcrest at Cadia Ridgeway, which has produced, I think, the endowment's over 50 million ounces and 10 million tonnes of copper. So you're talking a behemoth by global standards. So there's a few significant mines in the district. It's well endowed. Evolution's Lake Cow mine is about 80 kilometres to our north, and that's an epithermal, low sulfidation, carbonate base metal type system, so of similar ilk to Bauloora. So Newmont were there. The work that we had done recently at Bauloora took it. We shifted away from a prospect type focus to a district type focus. So changed the way we explored.
What does that mean, Chris? Sorry to interrupt you. What do you mean by that?
So if you were to look at a project, you might identify 5 or 6 key areas that you identify as your high priority prospects. So that might be small zones or target areas, which you then spend the majority of your cash drilling or testing those. When we stepped back at Bauloora, and part of that stepping back was just appreciating the sheer enormity of this system. It's immense. And then we spent our money on doing large-scale systematic work across that broader region. And what that does is that it sort of demonstrates that, we're not looking at 100 by 100 metre squared zones that might be a prospect. We're talking about kilometres and kilometres of district-scale mineralisation. So you're starting to talk, a project that has a footprint that, potentially can host a tier 1 deposit. And so that's, I think, extremely important if you want to, chat to a major or have that sort of interest. They're looking for, that's what they do. They're not looking for small scale deposits. They're looking for large systems. And that work that we sort of did was very much focused on proving that system scale, up.
When you were doing that work, Chris, did you have it in the back of your mind that if this system is so immense, we're going to need a major. In other words, I guess what I'm asking you is, did you start off with the end in mind by doing the work in such a way that someone like Newmont, when they came along, went, aha, we see what you're doing. Now we want to come in and help you with it?
Yeah, no, we didn't. And one of the reasons why is that had been the previous explorers on the ground had often taken that approach. And what it meant is that they didn't do the work and sort of tried to get a deal done without really, I guess, demonstrating the value add. We approach Bauloora like we do all our projects, that, we see it as a piece of ground that's prospective, that we can add value to it. And that's why we sort of target systems that are shallow, near surface. So we don't do, deep undercover exploration for that type of the costs that's involved in that. So we worked it up ourselves. We did, start to reach a point where, we realised how significant the system was from a footprint scale. And a lot of that came down to the size of the vein field. We've sort of defined around 30 square kilometres of epithermal veining, and within that around a 15 square kilometre gold zone. So you're talking quite large. And I guess then the strategic discussions from the exploration and corporate approach is, well, what's the best way to realise value across such a large project? What does it look like in terms of funding that? What's the probability of success when you look at these systems? Because they can often take some time. I think that's something that the market doesn't necessarily understand all that well, particularly the Australian market. But if you were to look at many examples of these types of systems overseas, there's a few in Australia. Pajingo is a good one up in Queensland, but they have a real tendency to exhaust juniors that attempt to tackle them. And that exhaustion, means that they're worn down, and they get worn down, and then they either end up relinquishing it or doing a deal at maybe more of a weakened point in that sort of funding or finance. So we sort of try to avoid that, and part of that is bringing Newmont on at a relatively early stage in the project. We're only talking about just ticking over 5,000 metres of drilling. So this is extremely greenfield in that regard.
Which is actually what I wanted to come to, is if you could just outline to us what this deal looks like, because from what I understand, I'll let you say it, but I've got some questions around it. So just talk to us about what the deal looks like. Yeah,
so the deal essentially allows Newmont to earn in at a staged approach. So it's a fairly sort of standard joint venture from that perspective. 51% for the first 5 million spent, and then a further 10 million to earn up to 75%. We've structured the agreement in such a way that it's a discovery-focused joint venture. So both parties, we're keen to make discoveries. We're managing the project for the first 4-year period, which we feel is extremely important for us as a junior, that we can, with Newmont's guidance and technical, assistance there, but, that we can guide the drill bit. We can, I guess, generate those discoveries in a sort of manner that maybe more suits a junior's timeframe as opposed to a major's timeframe. There's a lot of talk around, majors can take a while to develop projects, but we certainly feel that Newmont are pretty aggressive just based off their previous exploration history in New South Wales. But importantly, not only does this project allow for, a sustained exploration effort, it's really the back end part of the deal that we feel adds significant value for shareholders, and that's that funding through to production. So it's not all that common to see in a joint venture agreement that we can get a loan carried through to production with Newmont. And should we elect to take on that financing deal with Newmont, which is repaid out of the proceeds of, any future minerals production at Bauloora, but that leaves us with a significant 20% ownership of a Newmont-sized mine. And I think that's important to sort of note is, when you're talking about a Newmont-sized mine, they're looking for tier one deposits. And so we feel that, if Legacy doesn't have to spend another dollar on that tenement, and, we've introduced that opportunity to Newmont, that's a fantastic outcome for shareholders.
Well, I've got a couple of questions around it, if that's okay, Chris. My first one would be, is there a thought that maybe, because I don't know, I'm talking for our audience out there, perhaps that you've given away the crown jewels of Bauloora a little bit too early. 5 million, spend 5 million, big company like Newmont, and earn 51% of the project, another 10 million, and they've got 75% of the project. Could you have negotiated a bit harder, or could they be spending a bit more? Because if this is as big as you say it is, 5 mil doesn't seem like a lot for them to be able to judge whether to keep going.
Yeah, I mean, 5 mil, it's a great question. It's certainly a question that we fielded a couple of times as well in that regard. I guess if you were to look at, firstly, put the Bauloora project into perspective with the rest of our portfolio. We mentioned that we've got 1 of 7 projects that all require funding. So Legacy needs to look at opportunities, particularly in what is quite a difficult market to raise capital, and what that dilution means for shareholders. So we're always actively looking at opportunities for other sources of funding to take the project forward or take some projects forward. So we're weighing up those opportunities in the broader portfolio. When you're looking at the Bauloora project itself, what often happens in the way that this JV is structured is that to find a world-class deposit isn't going to end up being 5 mil or 10 mil. What happens post that earning stage being complete, or even on the way up to it, is you're going to see a significant amount of expenditure that could, if you were to look at the exploration costs for some of the major epithermal low sulfidation discoveries globally, you're talking in the hundreds of thousands of meters of drilling. So that's where this project, once you move to that ownership stage when Newmont are funding it, it's not 5 mil or 10 mil. If the system's performing geologically, that you're talking tens and tens of millions year after year as you build that system and test it. And that's if you want to sufficiently test the vein field as well, which is what these types of systems require.
So if they continue to do the drilling and say they spent the 5 mil, they get the 51%, they then go and they've got the 75% of the project. Legacy have continued with their 25 mil. Do you guys have to put any more funding into this project, or will they keep funding it going forward?
Yeah, they fund it through to production. So when it comes to building a mine, if the mine costs, $500 million or $1 billion to build, Legacy's percentage ownership, that 20% at that sort of stage, out of that
20 or 25.
If we elect to use the Newmont financing, we revert to 20%. So that's where that sort of figure comes into it. So I'd say that's probably the most likely option when we hit that point, is that we would choose that financing, because if the mine doesn't go ahead, that's where the repayment of that loan essentially comes out of our share of the revenue. But that's where that extreme value sort of comes in at the back end of the deal, is that it's not a stop at a PFS stage or a JORC resource. This is structured from discovery through to production. And so Legacy not having to fund another dollar on the project, that's a huge outcome for shareholders. At the same time, when you look at the 6 other projects in our portfolio that we're actively exploring in the shadows, over the past year, as we sort of made that, I guess, sharpen the message to the market. But, you're talking about having the ability to have a significant exploration effort at Bauloora, which, knowing these systems, that can be slow at certain times, and you can spend, a fair amount of money, make relatively little progress. That's the difficulty of these systems. But it's that patient, systematic exploration effort that the retail market often fails to appreciate to some degree. That we couple that with the high impact work that we're doing across the rest of our portfolio as well. So it needs to be looked at, I guess, holistically in the portfolio too.
I do want to get on to the other parts of the portfolio, but a couple more questions. When you say epithermal, is that quite difficult to unlock the value in an epithermal system? Just explain that to us a little bit. Oh, all us non-geos out there, Chris.
Yeah, it's a good question. So this is often seen in some of the better epithermal systems or low sulfidation systems. They have lots of different flavors. So you might see more traditional textbook low sulfidation style, which is a particular type of mineral emplacement. With what we see at Bauloora as well, this intermediate. So we get a lot of base metals that come up into the system. So it's not necessarily a difficulty in the system or the way it's mined, but it's about finding the best zones in the system. So if you've got a vein strike that's a kilometre long, and it's gold bearing or is mineralized, you're going to find a high grade a shoot essentially in that strike somewhere. That's what you're trying to target, and that shoot could be 50 meters wide. But it's really about targeting and vectoring down to those types of the deposits. So when you talk about a vein field where you've got kilometers and kilometers of these epithermal veins, that's where that systematic drilling comes into the piece. And depending on how good geophysics and good geochemistry, in terms of that generative work, you can potentially see some of those wins come relatively quickly and easily. And there's been a few good global examples. Chatri mine in Thailand.
Yep.
I think they got maybe 2 million ounces within the first 40,000 meters of drilling type figure. This is quite broad here, so don't quote me. And then you have other mines like Sierra Negro that might have taken 100,000 meters of drilling. So that's where that sustained systematic approach comes into it, that often those juniors can spend a lot of money and not really reap significant rewards in those early stages as they develop those projects.
Okay, so to answer my question right from the beginning, which was all about have you given away the crown jewels too early, I guess your answer is no, because this is going to be right through to product. Like, we don't need to worry about diluting shareholders, spending another penny. We've done a farm in with Newmont and they're taking the lion's share, but at the same time, we still have a bit of control there.
Yeah, control. They share, that by funding it, they're bearing a lot of the risk as well.
Yeah.
Obviously, they consider it to be a good risk because they know their epithermal systems, having produced and found many globally. So that's obviously a key benefit for us. But no, we certainly feel that taking it through to production, that we wouldn't have to raise another dollar for this project to potentially see a fairly considerable stake in a Newmont-sized mine as being a great outcome for shareholders.
Just quickly, Newmont, Newcrest in the news at the moment, takeover bid going on by Newmont for Newcrest. Does that impact at all this deal?
It doesn't impact the deal. What it does, we see it as extremely positive though. Newmont and Newcrest have a strong alignment in terms of where they explore, which is predominantly better jurisdictions from a sovereign risk perspective. So a lot of Americans, North America, South America, and Australian presence as well as, so that sort of alignment in where they consider to be good areas to explore and mine. If Newmont were to, finalise that non-binding proposal, they'd be taking over Newcrest's Cadia Ridgeway, which, pointed out Australia's largest gold mine. Newmont would be combining that with their WA operations to really put themselves in a position as a hugely dominant, global miner in Australia, being one of the few public joint ventures that Newmont has, puts us in a fantastic position from an exposure, from a should you get down the track and lobbying perspective for any sort of future operations. It gives us access to infrastructure. There's a huge lot of synergies that we see that would benefit something happening at Bauloora down the track. But we certainly feel that it would be a good outcome for us if that was to occur.
Okay, so we're running out of time. I just want to ask you a couple more questions. Firstly, this deal, it's ring-fenced around Bauloora. You're still going to be managing the project, but that's that particular project. You've got 6 other projects, all 100% owned by Legacy Minerals. I just kind of want to understand the value uplift for shareholders going forward. What's the focus going to be?
Yeah, so we're going to be focusing on our copper system. So that's, most of these are copper gold. So that includes Rockley, which is a porphyry copper gold. We're out at Cobar, so we're right next to the Peak Gold mines. And again, we're targeting Cobar type deposits out there. So that's copper, gold, lead, zinc, being near Australia's highest grade copper mine, which is the recently sold Glencore CSA mine. And then we've also got another epithermal system, Black Range, which is significant footprint, a lot of hallmarks to another Bauloora type system and being overlooked and underexplored. So we're keen to start to bring those projects, particularly Black Range.
Sorry to interrupt you. Black Range, I haven't heard, excuse me, I haven't heard very much about that. Is that new to the portfolio?
We've pegged it relatively recently. So it's been in our quarterly reports. We haven't made any announcements around what we plan to do there, but we will be making a statement shortly around what that exploration approach is. But we see a lot of the mistakes or the shortfalls in the previous exploration efforts at Bauloora, and which has allowed us to be successful in the work that we've done, essentially repeated at this other project, which is again another low sulfidation epithermal system.
Okay.
Huge strike, and just has not had any systematic work done since Newcrest dropped it in early 1991.
Oh, so, wow. Okay. And it's been sitting there untouched ever since. How do you
a few other companies that have sort of had a focus here or a focus there, but when you read all this, the pre-competitive data and the public reports, like we did at Bauloora, it's quite, that's where we see those opportunities at what other people have missed or what they haven't done that, would cost us relatively little to potentially add a significant amount of value. So I'm not going to call it Bauloora 2.0, but we're certainly seeing, a great opportunity down there.
I'll call it Bauloora 2.0 then. So are you going to be starting the work on that now, or have you started work there?
Yeah, so we'll be starting to work on that. And then, Rockley and Cobar, they've sort of sat in the portfolio there, overshadowed by Bauloora. And that was, we definitely messaged a focus on Bauloora just to sort of help, 7 projects is a lot to present to the market, particularly at from an attention span perspective, but we're going to be back into those tenements quite aggressively, and we really see that a few good discoveries and high impact news flow out of those copper focused tenements are going to be really significant value add for shareholders in the coming months.
Chris, do you see Legacy Minerals as the type of company that does what you've done at Bauloora? In other words, do the work, do it well, do it systematically, and then do a farm in JV, whatever you want to call it, with someone else so that you're not diluting the heck out of shareholders, but you're showing a lot of value going forward. Is that kind of the strategy?
Yeah, we don't, we don't like to call ourselves project generators in that regard, like generate projects, because we do see value in holding and retaining projects to a point as well. What we sort of get out of the Newmont deal and Earth AI, who are doing a similar sort of earning structure with their artificial intelligence, is that it does allow us to continue to acquire and build a critical mass of projects that if they're funded, if we've got 7 and we can add that value, as soon as we start to transition out of the low cost value add, which is when you start to move into those expensive drilling sort of stages, that's when we look at those options. And certainly for projects where we see, I guess a good opportunity to demonstrate value to the market through a JV or the scale, we look at that. But we're not fixed on I guess the model of JVing out everything. We want to retain ownership where we feel it's right for our shareholders, and we are very much focused on that sort of aspect of our exploration strategy is tied into that. What's the best way to realise value for shareholders in the company?
Remind us, Earth AI, which project are they working on with you?
Yeah, so they're on the Fontenoy and Mulholland projects.
Okay, and how much have they done there? What's the latest update there? As I say, we're running out of time, so give me just a really quick brief.
Yeah, so Fontenoy has been the focus of their efforts, and that's a copper gold system. We're they've been working out there since December last year when we put out an announcement. So I expect some news flow in that shortly to come from them. We're quite excited about the work that's been going down there, and we've gone out in the field with Earth AI as well. Big system, 8 kilometres of copper gold mineralisation at surface, big intercepts down there. So we're quite excited to see what they bring to the table and what that tenement is going to showcase for shareholders as well.
All right, and finally, have we Harden? Is that Harden behind you?
It is. That's our diamond. I can't actually see; it's so small. But I think that's our diamond rig that we had at Harden last year. Yes, when we wrapped
Okay, so what is much happening at Harden at the moment? I know you got your hands full, but
yeah. So Harden, it's a good question, because what a large portfolio means that you're weighing up, I guess, that discovery success and the value adds from not only prospects within a project, but project to project. We got some really good hits down at that Harden drill campaign that we did down there. 5 meter 7. There's been some great hits across the broader tenement, three at 21. What we found at Harden is it is going to be that orogenic shear hosted type system is going to require a lot more drilling. So when we sort of weigh up, is it best to spend that type of money drilling out, those prospects at Harden, which are, we think fantastic and present significant, opportunity for a high grade shallow resource, a bit like Darg's Reef. But we do weigh it up with, what it's, some within the rest of our portfolio. You're talking big projects like your epithermals at Bauloora, like your porphyry targets at Rockley. And at the moment, we're certainly seeing a lot more value that we would get out of spending money on those projects as opposed to Harden. So we're just ticking along in the background, but not a big expense for us at the moment.
Okay, Chris, I've got to wrap it up, mate. You just have to come back because there's still lots to talk about. And congratulations on doing the work methodically, systematically, and attracting the eyes of a major such as Newmont, because I think that's a really exciting time for Legacy Minerals right now. And you guys should sit up and take some notice, especially now that I just saw today the gold price has ticked over 2,000 again, which means 3,000 Aussie. Can't make money in that sort of environment. Shouldn't be in the game. Chris, give me 3 reasons why people should be sitting up and taking notice of Legacy Minerals right now.
Yeah, I'm sure. First, it's the depth of that portfolio. We've got active work programs coming up across a series of tenements. Talked about Black Range, Rockley, Cobar. So we're talking about sustained news flow, generative works as we move towards, drill targeting and drill testing some of those. So that's the first one. The second one, is that Newmont deal. We see that as, if you want to invest in a speculative junior on the ASX, there's plenty out there. We sort of feel, we'll certainly definitely feel that this really steadies and underpins the value for Legacy, a long sustained partnership with the world's leading gold producer, as being a significant sort of point of difference to many other juniors out there. Noting, it's only one of 7 projects in our portfolio, but to have that sort of backing is extremely important. And thirdly, I talked about those upcoming, discovery catalysts. That's what, lastly, we look for in the portfolio. We're focused on, delivering, results to shareholders through systematic work, through exploration work, and that means good news flow, and that's what we're planning over the next couple of months.
Couple of months, my goodness, and they only IPO'd in 2021, ladies and gentlemen. So what are we talking about? April 23. These guys have been hard at it, attracting the likes of the eyes of Newmont. What a congratulations must go to you for that. And I wish you all the best. And what I loved is, you know what, ladies and gentlemen, I would prefer to be having 20% of something that other people are spending the money on rather than spending all the money and potentially who knows what the outcome can be. So very clever and love what you're doing out there. Chris, come back and have a chat with us. But for now, thanks for joining me on Small Caps.
Thanks, Kerry.